Hi guys, welcome back to another day, another video. In today's video, we're going to be talking about the entire footwear space. There are around 7 companies in the footwear space. I will start by giving you as the what is the overview of the sector, and we will see as to what these individual companies that are doing. We'll be covering Metro Brands Limited, Campus Activewear, Redtape, Bata, Khadims, Liberty, and which is the other one? Bata, Khadims, Liberty, and Relaxo Footwear. Okay. So, anyways, we'll cover all these 7 companies. Now, one thing I will tell you, see, in the entire, if you look at the entire B2C space, right, over here, if you look at the different categories, there are two industries that are performing really well. Okay, one is a value fashion space, and the other one is the jewelry space. In these two categories, if you see that the tailwind has been so strong and the demand is only increasing on a year-on-year basis. I think it's been good 2 years since the entire jewelry sector and since the entire value apparel, value fashion space has gone into a boom, right? But on the other hand, there are two sectors. One is obviously the footwear sector and the other is the QSR sector, which has been quite the opposite compared to the jewelry and value fashion. अगर jewelry and value fashion में demand है, tailwind है, तो यहाँ पे उसका completely opposite है, where it is, there is no demand, there is no tailwind, and in fact the situation keeps getting worse and worse and worse compared to the last quarter or even compared to the previous year, same time previous year. Okay, so if you look at the footwear space, now let us talk about few things that are very, very common across the companies. One, if you see, the demand conditions has been very tepid, okay, and this has been there for a quite few quarters. We've seen, right, once the pent up demand went post 2021, we haven't seen that demand come back up to the normal levels, right? We are still facing a very subdued demand from the consumer side. Now, along with that, what we've had is a raw material inflation, right? And it's been very hard for certain brands, to cope up with this raw material inflation, because they're not able to increase the price. Okay, then the third thing that comes is the BIS regulatory. Okay, so earlier all this while we have seen this BIS regulatory, it has been in talks with all these footwear companies, but we're finally seeing it materialize. Okay, now what this BIS regulatory does is, they said they put up a set of rules and regulations which are supposed to follow in terms of the materials. Could be you have to maintain a standard in terms of whatever the materials that you use to make your products. It could be the regulations can be even in terms of you are putting ban from where you're getting these product from. Like for example, you put a ban on the imports of all these soles that is sourced from China. As you know, in the footwear there is a top part and then there is a sole part. Now there has been a ban as to you can't source all this sole and other parts from China. Basically there has been an import ban on all these things. So several other, so basically this is where the BIS ka full regulatory body has come into full-fledged force now, and the BIS is telling that whichever products of yours, whatever it is, either it is in the showroom, either it is in the production, whatever it is, if it doesn't pass our rules, doesn't pass our regulation, it has to be, all of this product will give you a time limit until July of 2026. So make sure you're getting it rid of your inventory after July of 2026. You can't sell these products. Okay, so they've given a time limit. So now what has happened is all these companies that are having these products which are not matching up to the standards of this new BIS regulations, they're trying to get rid of it. Now if you have to get rid of some products, that becomes a dead inventory. Otherwise, what you're trying to do, you're trying to give out a discount, try to reduce the price, do a lot of reduce the price, discounting schemes and all of that. So the volume growth that you see with many companies that are there is a result of reduction in price, which is driving the volume growth. Now see, we always tell volume growth is the most important parameter in any B2C kind of companies that you do, because a lot of B2C companies, unless and until they do not have a really good brand, it becomes a pure volume game. And especially in India, a lot of companies, they do it's a full-fledged volume game. Now imagine what kind of volume growth that you need. Volume growth is important, but if your volume growth is coming at a cost, if your volume growth is coming at a cost of you having to cut down on the price so that you drive your volume growth, or let's say if your volume growth is coming at a cost, let's say you can increase the volume growth by giving some discount, that becomes a negative thing, because ultimately you might be selling more number of products but your margin is getting hit now because you're selling it at way lesser price than what it is supposed to be. Volume growth, increase in volume growth is a very good thing, but you always need to ask yourself, you always need to question, ये volume growth कैसा आ रहा है? Is it coming by naturally selling more and more products, or are you inflating the volume growth by reducing the price. If it is a case two that you're doing, then that is the kind of company that you would easily reject. You do not want to be a part of their journey. Okay, so that is another similar phenomena that is happening. A lot of destocking is happening across the entire footwear space due to this BISK regulations mark. Okay, now out of all of these companies that I spoke about, the 7 companies, let's talk from the most interesting to the least interesting one. Okay, the most interesting over here is Redtape. Okay, so Redtape, since the time it has been demerged from Mirza International, it has been performing really well. It continues to be the highest growth, or the highest growing company in this space. The growth has been around 28%, but it is another third quarter where we are seeing that the operating leverage over here is not visible, right? If you look at them, or the PAT that is there is around 25 crores for this quarter versus 28 crores for the same time last year, right? So we're seeing a miss out in terms of operating leverage. Of course, PAT is growing really well only, but we do not see that, and we also do not know what is the reason as to, like, why we are seeing a missing on operating leverage, because again, this company does no con call, nothing, right? We also do not know what is the number of stores as by the end of Q2 is, because I think the last time in FY24, if you look at FY23 versus FY24, they added roughly around 135 stores. After that, what has been the addition of the store, nobody knows. But having said that, looking at the growth rate that they've been able to sustain for another 2 quarters in this year, it shows that probably there is some sort of their SSG must be high, and also the pace of growth, they're adding up really new stores and it is performing really well for them. And probably the pace of growth, pace of store addition is so high, because if you're adding more stores, your depreciation cost is upfront, employee cost is upfront. Maybe that is why they're missing out on the operating leverage in the bottom line. So that is one of the reasons. So that continues to be the number one player. Redtape continues to hold that space. The second we have is Metro Brands. Metro Brands, the problem over here, if you look at them, is the pace of growth has come down gradually over a period of time, right? It went from being a 40% to 30%. Then they told they will do 25%. Abhi they're telling no, we can no longer do 25%. We are revising our guidance and we will do around 12 to 15% kind of growth. And that is exactly what they have done. Revenue this time grew hardly 5.1%, and PAT also grew by 5.7. At least a good thing right now is we do not have that Filaka inventory losses, right? This time, if you look at them, the main concentration has been to get rid of that, to start relaunching Fila, and we can see new Fila stores to be relaunched under Metro Brands starting from next year. But having said that, over here also nothing much interesting happening. They're telling ki like hum log 12 to 15% say we will be growing over here, and store expansion is normal. Store expansion, if you look at the CAGR also, it comes up to 9%. Okay, again over here nothing much. Only thing is they're putting up new and new third party brands they're getting into there. Like in the beginning of the year, they signed this Foot Locker, right? We saw them signing Foot Locker, and now they're styling up with they're teaming up with New Era, which is basically you would have seen these brands, right? Which sells your hats of certain companies names, or of a certain sports teams ka name. So that is where New Era, they are more of a lifestyle and accessory apparel kind of brand, and they will start again contributing to the top line and bottom line of Metro. Over here they're doing a lot of acquisitions and everything, but having said that, post that Fila merger that they did, post that acquisition, not merger, post that acquisition, what we're seeing is the bottom line that is there hasn't been growing, and on top of that, with the existing demand conditions that is there, we don't even see a lot of sales growth or volume growth happening in the existing stores of Metro Brands Limited. That is their own brands also. Okay, so that is that about Metro Brands. Then we have another interesting player. The third player over here is Campus Activewear. Okay, and Campus Activewear has been quite a surprising set of numbers over here. If you look at them, Campus ka sales grew 36.3% year on year. Now you might ask me, like, why is that you put Campus on a third place when Metro is growing hardly at 12% and Campus is growing at 36.3% on a year on year basis. And it's quite shocking, right? Because if you followed this company, which only post the first few quarters post IPO, they did really well, and after that it's been a completely downturn only for them, right? Because the sales growth was not there, volume growth was flat, one or the other problems, their distributions was not working well, right? Now over here you see that this one quarter that is there, it has been it has been a huge spurt in terms of growth, 36.3%. So it begs you the question to ask, like, will this growth be sustained? Is it sustainable or not, right? And if you look at their PAT has been PAT hasn't grown, because PAT that is there, hardly. PAT is at INR 14 crore, and last time if you see, it was I think they just broke, it was break even. I think hardly it was 0.3 or 0 crore ka profit they had done. So anything with respect to that will look good, right? But other than that, if you look, the most important thing with campus is the volume growth, because if you look at the campus ka business model, we know one of the USPs that they take pride in, that they take a lot of pride in is, we are basically your, basically, like, if you can't afford Nike and Adidas and Puma, you can come here and shop at campus, right? So obviously, since you brand yourself in this way as an alternative for all these top three brands, then what becomes, it becomes very difficult for you to increase the price, because you form yourself as an economical, as an affordable brand over here, right? So it becomes again very difficult for you to get a price increase over here. So volume growth becomes important. And if you see over here, even the volume growth over here has been very stunning, 36.3, right? It has gone from, last time it was 39.3 lakh pairs, right? 3.9 million pairs they sold last time, and this time they sold around 5.3 million pairs. So how is that, this 40% kind of growth that you can see, like, what is the reason? The sales grew by 28.8%, and the volumes that is there grew literally by 36.3%. Is it sustainable? Now it comes back to the points we were discussing earlier, as to, like, the points we were discussing at the starting as an overview of the sector, right? Where I told you, because of this BIS regulatory norms that are there, you have to get rid of a lot of your inventories, and you are doing so by selling it at a discounted price. And that is what is happening even over here. There has been a lot of discounting, not just through this, but also, over this period in the H1, we've had this big billion day sale, either in Flipkart and in Amazon also. You have this end of season sale and all. So when they are selling in this direct to consumer channels such as Flipkart and Amazon, what has happened over here is these platform people try to give a lot of discount, right? That one is that phenomena. The other phenomena is, obviously, you have to get rid of an inventory, and these people are trying to get rid of an inventory in a phased manner, which means instead of getting rid of all of the inventory in just one shot, slowly in a period of 4 to 5 quarters, they will get rid of it. Now it's because of these two reasons is why you're seeing this huge volume growth. And you also see that the sales growth has gone from a single digit or a low double digit to a high double digit, from hardly, from being a 15% kind of growth engine, they've gone from there to right now a 28.3% growth engine, right? Now it becomes very hard probably to sustain this, like I told you, if it weren't for these big billion day sales, if it weren't for this sales that happen through various platforms, or if it isn't, for you to get rid of your dead end inventory. Because like I told you, the demand condition still continues to be tepid even for campus activewear. And then we have the last four companies such as Relaxo, we have Khadims, we have Liberty, and we have Bata, right? Here, over here, you see one of the common phenomena again. The other three companies that you see, they are a bit better, I can tell, compared to the other four, and they serve a little bit of a premium category compared to these four, that is Bata, Khadims, Liberty, and Relaxo. Now, what is the problem with all of these four businesses is 50% or more than 50% of the product comes from under 1000 category. If you look at Relaxo ka around 92 to 93% comes from that below 1000 category. Bata ka 50% of the revenue comes from below 1000 category. Khadims and Liberty, somewhere between 60 to 80% of their product comes from under 1000 rupees ka category. Now what happens under 1000 rupees ka category? First of all, it becomes very hard for you to take a price hike. Let's say, for example, you're selling a Hawaii chappal for 100 rupees and you sell it for 120 rupees now, right? That's a 20% price hike you're taking to protect your margins. Now, but for example, if I am to suppose to buy a chappal, do you really think I will care for a brand, right? And you are selling to that consumer point where this 20 rupees is also a big price pinch for them. And these are the kind of people who wouldn't care for, which brand, as long as you're here the main USP becomes affordability, right? And here itna sara unorganized players hai in this 1000 and below category. There are so many unorganized players that if you increase the price over here even by a little or a few basis points, you lose your market share. And those people, unorganized players, right, they come and gain your market share, because they, if for them it is just volume game, they don't care. But for you it becomes very hard to sustain at the end of the day. So this is a huge problem with all of these four companies. Very difficult to get a price hike. And on top of that, like I told you, they have a huge part of revenue coming from below 1000 category, unlike the other three. If you look at Metro ka, I think right now it is even less than 10% coming from 1000 category, if I'm not wrong, right? Because they started to discard that 1000 category and less for a very long period of time. Yeah. oh yeah, around 8 to 10, 8%, between 500 to 1500, that range is hardly 8% for metro. Similarly for campus, around 40% you can tell. And other than that, Redtape also, since those people don't do, but again, Redtape also is a bit affordable premium brand, you can tell, compared to the other three. But these four companies that are there, for them above 50% and more of the revenue comes. And this is the part below 1000 ka jo price point that is there. This is the part that gets hit the most. Every time there is a little bit inconvenience. Now, this is the category that gets literally slashed, literally where you see a lot of problems. One is when inflation comes, you can't increase the price, your margin gets pressured. Now we have all this BIS regulation. Again, there is a lot of pressure for you to get rid of this inventory and everything, right? And on top of that, kya ho raha hai? First of all, demand hi nahi hai, right? And all of your other unorganized players are trying to give discount and trying to sell. And here you are trying to increase the price and nobody's even buying. And that is a very common case among everything. And that is why you will see the numbers are also same thing, right? If you look at Liberty, sales is flat and PAT is down 65%. I mean, what more do you want to look? What is the point of looking any further when the sales only is not there and the PAT only has fallen by 65%? Think about this, because if a company, why I stress so much on the PAT is because if you as a company do not make any kind of profit, then the EPS will not grow. And if the EPS is not growing, and if I am a shareholder in that company, I will not make money, right? It is a basic logic over here, right? And so when two most important parameters don't go, is completely going in the southern direction, there is no point in going forward. Okay. Similarly, if you look at Bata also the same thing. Sales is up hardly by 2.2 percentage. PBT, I'm considering PBT over here. Profit before tax is down by 52%. Why am I considering PBT and not the PAT? Is because if you look at the last year ka PAT in Q2 of FY24, there was this exceptional item of 40 lakhs. I think 40 lakhs or 40 crores. I think 40 crores. 40 crores ka kuch exceptional item tha. It came, because in one of their plans they gave this voluntary resigning, right? And a lot of people took forward it. As a result, because of this, there's this one-time exceptional item, due to which, it might look that the PAT, because of which Q2FY25 ka PAT is subdued. So anything with respect to that subdued PAT will look better. That is why compare the PBT, and the PBT over here, if you see, profit before tax is down by whooping 52%. Now, why is that so? Is because, like I told you, 50% of the revenue comes from what? Under 1000 category. Okay. And यहाँ पे क्या हुआ है? The volume growth compared to the pre-COVID levels is been down by probably 31 to 38%. And these people are so shady in a way that these people never give out volume data. I mean, if you have so many sub brands under Bata, right? You have Hush Puppies, which is a bit of a premium. You have your school ka jutas, right? Which ranges between 400 to 700 ka price point. You have their floats collection, not sneakers ka collection. So you should give as to, like, different sub brands, what has been the volume growth, or at least on a consolidated basis. And they never give that volume growth either in a PPT or in terms of, in their con call also. Even if somebody asks, they only compare it in terms of pre-COVID levels and, give you a range of numbers, right? So having said that, again, the fact that the sales is not there and even your profit is hardly anything, it's just a testament ki, like, volume growth has not been significant over here. And not just that, if you look at them, the store expansion rate also is not, because if you look at the store expansion CAGR, even that comes hardly to like 5 to 8% in that category, right? So Liberty and Bata again goes out over here. Then we have Khadims. Okay, Khadims over here, if you look at them, Khadims over the recent times, they have done this, they've done a lot of things like demerger, merger and everything. Okay, but having said that, again, यहाँ पर भी वही problem है. 70% of your sales happen below 1000 category. And even if you look at इनका जो sales है, there are two kinds of sale. One is through retail stores and the other one is through distribution. Retail stores is around 62% the revenue contribution, okay, in Q2 FY25. Okay, and Khadims is your big brand. Okay, most of the sales happens through their own brand called Khadims, and then they sell third party brand. Okay, here what they're trying to do, Khadims is trying to do same logic. Okay, they're trying to decrease their price on the MRP on the Khadims ka apna footwear and try to drive the volume growth. What is the point of doing so, right? I know you're going to tell ki, like, mera thoda revenue badega, but having said that, when you're telling me you have to reduce your price to sell more, you're just indirectly telling me that your product is no good, there is no pricing power. Okay, and again, the same thing is happening over here. 70% of the sales, sales grew by 2% on a year-on-year basis, right? Let's not even talk about the other things, like really again depressing set of numbers. And over here also, these people have added 35 stores in H1 FY25, taking the total store count to 891 stores. Now 891 stores है and you're adding around 70, let's say 35 stores in H1. H2 में आप ज़्यादा ही कर लोगे. Let's say you're adding around 80 to 90 stores in a year, right? So 891 stores है, you're adding around 80 to 90 stores in a year. It will take you roughly to double the store count. It will take you 10 to 12 years. That's, can you imagine the CAGR? If it is taking you to, if it's 10 to 12%, then your CAGR comes in low single digit, right? And 70% of your sales, by the way, happens, right? 62 to 70%, the mix keeps changing, happens through your retail stores, right? Which means what? आपको store expansion करना बहुत जरूरी है, वरना आगे जाके it becomes a problem, it becomes stagnant. And यहाँ पे store expansion is also coming at a single digit growth, right? Single digit CAGR आ रहा है. Then imagine what is the condition of this. Other than that, what these people have done is they've partnered with underline fashion house. Now this underline fashion house, they sell Puma ka socks. So now Khadims gets this exclusive license to sell Puma ka socks, to be a distributor for Puma socks and other Puma products. Now again over here also, let me ask you one question. See, first of all, you have to reduce the price for you to drive the volume growth, which means what? Your consumers are a little bit picky in terms of price, in terms of choosing the product based on price. So if that is the case, do you really think the consumers who are coming to Khadims to purchase a shoe or a chappal, do you really think that person would go and afford? I mean, they are so picky about the price that you have to reduce the price to drive your volume growth. Do you really think they would come to the Khadims ka showroom and buy 200, 300 rupees ka Puma socks? Like, would you think it would be reasonable to expect it out of them? No. And the second thing is, let's say if you are an really big loyal fan of Puma, would you go to Khadims and buy? You would go to Puma ka store and buy, or you would buy from any e-commerce website that is there, right? I mean, that is what you would do. So over here also, the other thing, again, it becomes a question, like what is the point, right? Even though you are doing so in distribution, even if you're doing the sale through distribution, maybe not in your store also, even then in that case, right, see, 60 to 70% of your sale is coming through your stores only the rest 20 to 30% is coming through distribution, right? So how much will it aid at the end of the day? Even though you're doing this, Puma acquisition and everything, you're getting the license to sell their socks, but having said that, only 30% of your sale comes from distribution, right? And out of this, आपका खुद का product है. It is not that all the 30% of distribution is coming from selling Puma ka things. No, it is hardly few percentage points. So again, makes no sense over here. And the last company that we have is Relaxo Footwear. Okay, Relaxo's, finally we saw there was a point where we saw the volume growth, but again it's come to a point where what has happened is they have increased the price. These people, they increase the price, they lose the volume growth, they less the, I mean, that is the point. Last time what they did, they reduced the price to drive the volume growth. This time they increased the price and now volume growth has taken a hit. In fact, if you see, sales is down by 5.3%, PAT is down by 16%, and volumes is down by 10.4% on a year-on-year basis. And agar management se puchte, management is telling it is a normal for us, we will lose the, we are increasing the price, we had a lot of pressure to reduce price, but we didn't do it, but we have increased the price in January, and now हमारा volumes जो है has taken a hit and we have lost market share. But having said that, we will gain the market share. That is how it goes. I mean, like it's very funny for me that I mean, it's kind of sad also, because this is the kind of business that used to be everybody's favorite once upon a time, and now it's come to a point where it's hard even to get. I mean, can you believe volume has degrown by 10 percentage points? It's not even like a single digit volume growth. Like it's a complete change, like a 360-degree shift from like how it used to be and how it is right now. This is why I keep telling you, you have to continue to track a business. There is no business that is going to be good forever. There is no business that is it will continue to be bad forever. Anything can change. We live in a world which is so dynamic. We live in a world, where anything can happen at any time. It just requires one war for somebody living in India and doing an operation, to completely change their operation here, right? I mean, it's crazy how the world works. But over here also, I think if you look at all the players that are there, whether it is Metro, Campus, Redtape, Khadims, Liberty, Bata, and Relaxo, I think Relaxo ka management is the one where they've been very scared in terms of demand. They repeatedly kept using the terms such as cautious. We are very cautious about the demand. We do not know how it will pan out. And aage jaake they're also also aiming hardly for a 8 to 10% kind of growth. And यहाँ पे एक problem क्या है? PAT is not growing, PAT is degrowing, right? If the PAT is not growing, how will the EPS grow? EPS is also not growing. If the EPS is not growing, because PE का formula क्या है, right? We need the EPS to grow for PE to grow ना. यहाँ पे EPS is not growing, as a result PE वहाँ पे full के बैठा है, right? It makes it a very, again, unattractive proposition, right? So all of it, that is the main problem over here. The problem with the bottom four companies, not just the bottom four, but all of the companies that are there, I would say other than Redtape, all of the companies, the problem is that the bottom line has been growing so meek, so meek. It like once upon a time, what growth that they had, one is they have lost on the top line growth, the pace of growth has come down. The second is the bottom line growth is so meek that the EPS is also not growing. Since the EPS is not growing, आपका denominator P का denominator is not, as a result what P का सबका P वाके फुल के बैठा है for a hardly, I mean, most companies over here are having a single digit growth, not just single digit, low single digit, hardly 2 to 5% ka growth. The only exception over here is Redtape. But having said that, since Redtape ka, there is a lot of anomaly in Redtape ka business. Nobody knows what is happening, why it is happening. It again, there is no conclusion to be drawn. There is nothing that we can speak about it. I think that is also one of the reason you see it doesn't get that, it becomes very hard for anybody, to analyze this business over here. But having said that, that's that about the entire footwear space, right? This is, I would say, probably the second year where we are seeing that the demand conditions is so tepid. This is the second year where we're seeing all the companies, they are posting a single digit kind of growth, and there is literally no bottom line. We do not know how long this will continue to go on. Hopefully it is this changes for the good, and yeah, it can make some money for anybody who's involved over here. Hopefully the wind changes for the better, in the better direction. That's that for the entire footwear space. I'll see you again in another video today. Bye.